Alrighty. Good morning, everyone. Hope we're all doing well. About 2 minutes till market open. Make sure everything is good here. Alrighty. Happy Thursday, guys. Hope you're all doing phenomenal. And we are sorting out the business on YouTube on a Thursday here. So we've been all over this market like a cheap suit. So I decided I would come out on YouTube, hang out with you guys, read the tape today, and keep it light on my end, share with you guys what I'm looking for, take some questions, and keep it smooth as usual. So with that being said, guys, let's go ahead and just dive right into it. We got 1 minute here till we get into the open. So let's talk about what we have here going into today. Alrighty. So looking at the daily chart here, we see the market is working inside of the fair value gap that we've been watching this week from this high down to this low. If you guys remember, we've discussed that at the beginning of the week. You'll see we opened on Monday, traded to the high, traded to the low, traded to the high, and we've really just been banging around inside that range we've been watching since Sunday. I'm still watching to see how we trade inside that range to see what they want to do with it. But so far, the daily bias hasn't been super clear and easy to determine every single day this week. So it's been a lot of surgical strikes, knowing what you're looking for, get in, get paid, and move to the sideline. So back and forth on the daily chart quite a bit. So let's drop down into our 15-minute here. 15-minute chart. Alrighty, so first things first, we're going to start with the midnight opening price, 9:30. And again, I already have all these things done on my chart. I just want to kind of walk you guys through the procedures, things I'm doing in the morning to get myself ready. So they blew out these sell stops here. That would have been the initial sell side we would have watched here. And now I want to see if they want to accelerate lower down into these lows here. So we note the 292 level. And then for S&P, it'll be your 72. So for the S&P over here, let's erase and note these lows here for the ES if they want to work it lower. There we go. One second, wait for something to load here on my own charts. All right, so we took out low here. So low taken here below the midnight open. Let's see if they want to accelerate it to the downside. It looks as if the price isn't refreshing here on my thing. All right, we'll drop down to the 1 minute chart. Hopefully TradingView cooperates here today. All right, so we're opening with a nice little gap higher on for the opening range gap. So let's get that measured here in efficiency. And we'll do the same here. All right, yeah, it's giving me network issues. Bam. All right, so I need to figure that out. 1 second, guys. It's giving me issues here on my end. Let's see what I need to do here. For some reason, the chart is not refreshing on this one here. Sorry, 1 second. Also be able to keep you guys updated. I'm still have my other charts up. So it looks like S&P doesn't want to run for its sell side. Same thing with NASDAQ. Let me see what I got to do here. Let's try a simple refresh. Yeah, I'm not sure what's going on with this. Try to reload the tab. Okay, yeah, I did. Let's try that. See if this cooperates here. All right, so let's drop down into our 1 minute. Note this previous day's high back here. So drop down to our 1 minute chart. Actually, before I drop down to the 1 minute chart, we'll stay on 15 minute here just for 1 sec. We are inside this range here. So just be mindful. It can create a bit more problematic price action here today because we're inside this range. There's not an obvious daily bias. And it's really been not the cleanest week overall. I mean, obviously there's been nice price runs. Like I said, we've absolutely murdered this fucking market all week, but really not the most stellar price run in terms of how we're just so compressed in the range here. So let's drop down into our 1 minute chart. Yeah, Abraham, it looks like reloading it has worked for now. Awesome suggestion. Thank you, sir. All right, so 1 minute chart here. All right, so off the 930 open, they dropped it down. They flushed down below these lows here. And now I'm just getting a feel for what they want to do with this thing. Like I said, we're in the middle of the range. We're banging around. I'm still not fully clear on what they want to do. Hopefully I'm not going to run into any more technical issues here this morning. So we'll go over to dollar and we'll keep it going. So we're bearish on dollar. Been talking about that since earlier in the week, and I shared an update, and I want to go into a bit more as to why here. So we traded to the high end, the upper quadrant of that daily gap. We rejected. We then created a new fair value gap here. So if you see, we trade up into this fair value gap, stayed in the lower half of this imbalance here. So that's bearish for this daily candle. So refining that down now for my Forex traders. We're looking for lower prices on dollar. So these relative equal lows here on the hourly chart, and then as far down as the lows here at the 96 489s. So sell side here, these relative equal lows are of interest. All right, back to NASDAQ. You guys aren't missing anything there. NASDAQ just banging around. Yeah, so we got a bit of a decoupling as well. NASDAQ's trying to drop, Dow's rallying. So you guys can look at that on your own charts. I don't want to cause any issues here on my end, trying to pull up too much shit. For some reason, the Google Chrome TradingView version likes to give me some trouble sometimes. So you guys are going to have to pull that up on your own chart. All right, so far, high resistance liquidity run, right? A lot of back and forth. Nothing really to do here. Nothing to really get excited about. For those of you guys that are watching dollar or Forex, we're looking for sell side on dollar. So that would be bullish for Forex and euro. Or sorry, for Forex, pound and euro, rather. Let me take a look at Forex real quick. Yeah, so pound, euro, ribbon. John, got the buy models going in the Forex pairs for you. Alrighty. Damn, I need a fucking IT guy. And I need one quick. Man, this is wild. You guys have no idea how many IT issues I've been dealing with this week. I need someone who knows what the fuck they're doing and can help me fix this laptop. Any price. You name it, you fix my shit, I'll pay it. So little help from the community out there. Let me know, reach out my DMs. And if you are competent and you understand how to do VPNs, you understand web and how to pull up TradingView on the web. And just so you guys understand, the reason I can't access, why the hell is this guy talking about that? I don't care. You're not missing anything in NASDAQ, by the way. I have the desktop version uploaded on my PC, so I have to use the web version of TradingView here on my laptop. So that's why I can't just use the desktop version. I have to use the web, and I guess I have to use a VPN at the same time so I can trade props and whatnot where I'm from. So yeah, that's why I've been having some issues on the IT side. So let's look at where we're at here. Frame the buy side looks like it's cooperating now, so we'll ride it till the wheels fall off. So at 9:30, they dropped it down. They took sell side below the midnight opening price. So far, it's a lot of back and forth, so it's a high resistance liquidity run in my mind, at least at the moment. What I'm watching is, do we sustain the run and then challenge the high that we have here at 843? Nothing I would take a trade on. It's just dog shit price delivery here. So this isn't anything I would be risking finances on, risking capital in. For those of you guys that work with me, you guys already know high resistance liquidity run is jumping off the chart to you. We're not here over leveraging our account in the first 10 minutes of trading. For those of you guys that are newer, what does that even mean? When you start to see a lot of overlapping price action, lack of displacements, lack of inefficiencies, it is telling you, sit down, boy. Sit down, boy. Do not risk your money in this because it is a rattlesnake and it will bite your ass. Oh boy. Hey, Aslam. What's up, brother? So this is the day where, as a technician, as an analyst, myself, this is where I relax, right? This is where, retail Rick, the guy who has money in his account, is all excited to place his trade, no idea what the fuck he's doing. He's in a hurry to plunk down some bets here today. And that's not what you want to do when you have this type of price action here. So these are things that are very important to learn. Not sexy, not flashy, but definitely saves your ass knowing how to avoid and step aside when it's choppy, high resistance liquidity run conditions. So economic calendar here today. What do we have on the agenda here for Thursday? All right, so all the high impact news came out this morning at 8:30 for the unemployment claims. So nothing to inject volatility at the moment. So like I said, guys, I'm still watching to see if they want to challenge this high back here. So like I said, we already dropped down. They already took the lows. It's not to say they can't go lower, but now that they took the lows, right, that's a stop run. So I want to see now, do they want to take this thing higher? However, Dylan, you taught one setup for life. It took sell side below 930 open. Why aren't you long into the highs? There's levels to this, right? And part of which is knowing the type of price delivery I want to be trading. And if you haven't been working with me for a while, you don't really understand what that means. That's fine. Show up, take notes. You will absolutely understand the difference between easy trading, which let me see if I can find that. Let me see if TradingView will cooperate here. All right, so easy trading is something like this here, right? Where it's low resistance liquidity run. You get in, it makes you money, lightning fast. You get paid at the obvious liquidity, done, move to the sidelines. This is a low resistance liquidity run, right? This is what it means here. High resistance liquidity run, right? Can still get there, right? If you're looking for the high, right? It still might get there. But am I willing to sit through all this back and forth? And where do you place a stop in this mess? You see how it becomes increasingly difficult to take a low risk entry, right? Place a reasonable stop on it and have confidence in this entire move while it's whips on. You see it becomes much more difficult to do that when you're in a high resistance liquidity run. So there's the contrast between those two different market profiles. And also which ones I'm looking to take risk and which ones I'm not looking to take on risk. So this is things I'm doing every single day. Every single day I'm live with my mentorship group, and either I'm trading or I'm watching market conditions like this and I'm not trading, and articulating why it's not a conducive environment for high probability trade setups. Very, very important to understand that, because it's not as simple as just show up. Oh, they took sell side. There might be a gap on a 15-second chart. Let me go long. Smoked. Because you don't understand the different market profiles and the difference between high and low resistance. Very, 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 very important to understand that. Especially newer traders, they don't want to hear that, right? They just want to, take trades and, eventually you learn. Can't do it like that. But these lessons here, understanding probabilities and when they shift in and out of your favor, and also knowing how to recognize that, right? Because retail Ricks are all right. We should be back now. If it cuts out again, then I'm gonna need to do something about this. This is ridiculous here. All right, so going down to a 15-second chart, as I was saying, right? Even if a pattern forms, just becomes increasingly difficult to trust it, just because of how the market's delivering here. So let's go to back to our 1 minute chart. Hopefully this thing cooperates. If not, I'll need to just clear the stream probably. So it looks like they want the sell side back here, 92s. For S&P, focus on the 72s here. You have those equal lows here on the ES down here for drawing liquidity. So 72s down there for S&P. And then we got the lows here for NASDAQ at the 92s. The NASDAQ tactics sell side at the 92s. Let's see if S&P wants 72s here. Beautiful. Beautiful. All right, guys. Hopefully I've been able to walk you guys through it. Hopefully my connection's coming through. This is very, very difficult. Dealing with fucking IT issues and trying to call the market to you guys. So 72s, here's the draw. This needs to get sorted out. This is just unacceptable. So guys goes live and he's bitching about his internet the whole time. Oh my goodness. Sorry, guys. I need to get this sorted out. That's just the bottom line here. So they attack the sell side here. So they failed to take it higher into the buy side here. S&P did trade higher. Whoops, sorry. Did trade higher into its buy side here, and then it broke down, and then targeting the liquidity here and here. And if you guys remember the pre-market analysis when we first started the stream, we talked about these relative equal lows. So that's always something they're likely to use, especially when it's this obvious. You guys know what retail see in there, right? They're double bottom support, and when it runs off that, they think it's bullish. They're going to trust their stop there, right? So the market will want to come down to that level. So you guys want me to show you an approach that you guys can use to fill up the grocery cart every week? Let me show you guys here real quick, see if I can. Hopefully this will cooperate with me here. So I always talk about how, 5 handles a day. Keep the 9 to 5 away. Let me see if I can pull this up here for you guys. There we go. So went short on a 15-second chart, covered at 5 handles. So 5 handles, just the easy little scalp here into the lows. So what I did was this 15-second fair value gap here. As soon as I called the lows to you guys, I'm able to jump in short here. And then I can just grab my 5 handles out of the market. So short here and then covered on the 5-point drop and not even needing the full 72 levels, just needing this liquidity here. More than enough. And that's just a little easy grocery getter. Those are forming every single week. Or no, sorry, not every week, every day. Right? Every day, those little price runs on the 1-minute chart to obvious liquidity. That's an everyday model right there. Get your groceries, get paid, move to the sidelines, you're done. Well, Dylan, you just said it was low probability. Why would you trade? Well, look at then we entered high probability. Breakaway gap here, creates it, leaves it open, displaces it. So it's very easy to see where it's drawing down here, the 72 level. And the order flow is obvious. So when I have all that in my favor, it's very easy to see what the market's going to do, and then I'm willing to put risk on the table. So now you're watching this 15-second gap here. We'd want to see this thing here repel price lower if we're going to trade down to the sell side here. And NASDAQ dropped down into its gap here. So look at the NQ. I know most of you guys are trading NASDAQ here. You see how, we're on a 15-second chart, by the way. You see how it's all back and forth here? It's not creating gaps and balances. It's a high resistance liquidity run. But then once we break down here, we leave the range. This is a breakaway gap here, right? Breaks down, trades into it, stays in the lower half, leaves the upper half open. So that's signaling it's underlyingly weak, it's underlyingly heavy. Make sure the connection isn't going out here. Yeah, so it's signaling it's weak. So whenever we enter a low resistance liquidity run, you will see it because it's going to leave gaps open like here. Left this gap open, 2 gaps left open, a third one, indicating it's bearish, it's weak, and the market's going to drop. Now, in the high resistance liquidity run here, you'll see, look at how the market's sharing the same ranges, right? Overlapping every gap. It's spending time inside of it. I don't want to touch this. But as soon as we transition from high to low resistance, then it's easy to see what it's going to reach for. We talked about the lows here. Then all you need is a little scalp to get your check there, get paid. So you can see the S&T divergence that's forming off that 9:30 open here. So you can see NASDAQ failing to make a higher high while the S&P did. And then once S&P started breaking down, it was easy for me to give you the sell side on NASDAQ, but also there's those 72 levels on S&P delivered 72s. Very nice. And again, if you haven't watched the free course yet, you might not understand why this is a target. But if you understand anything about anything as it relates to price action trading and what we're doing, this should jump off the charts here, right? This should absolutely be like a huge neon sign saying, look at me here, right? Because these equal lows here is going to have liquidity there in the form of traders protecting a long position with a sell stop, or they want to sell the breakout. Right? It's a lot of breakout artists that just saw this, and now they want to go short here. So they're trying to short below these lows here because the market's dropped. It's a breakout. They're trying to go short on the weakness, so they want to sell short here. We care not whether or not they're protecting a long or if they're entering a short on a breakout. We don't care. We just understand that that liquidity is going to be consumed. And if it's going to be consumed, then you can use that to pay yourself. And like I said, these little price runs on a 1 minute chart are happening all day long. Hopefully volume's good. Hopefully everything's good here on my end. So let's go up to a 15-minute chart here. And you can see it's just more of a scalper's market. What that means is it's just you have to frame the obvious liquidity pools. Once it gets to them, move to the sidelines, be content with enough, and leave it alone. That's what you many times have to do on these days here that are a consolidation on the higher time frame. Yeah, it's really been a consolidation week for the most part. And how do I know that? Because we keep gravitating back to the new week opening gap. So because we keep gravitating to the new week opening gap for S&P and NASDAQ, that's indicating we're in a consolidation market. All right, so let me do this here. Let me close off. Yeah. Okay. Yeah, Abraham, that sounds good, bro. Yeah, we'll talk about that after the session, and we'll talk to Mac support. Usually, Mac support's pretty helpful, so we'll sort that out then. All right, so let's do this, guys. Let me close down my Proposito accounts here. Propositos have been paid with little grocery getter. I give you real time here, right? So 72s. All right, not beating my chest though. That's easy, you know, little 5-handle run. That's easy, low threshold shit. This is shit we do every day. All right, so let me close out here. All right, so let's exit out of this here. There we go. Sorry guys, I'm very technically challenged in case you haven't realized yet. So let's disconnect. All right, should be good. I'm closing my VPN. Now that I banked, I got paid, got what I'm looking for. I don't need the VPN open. So I closed out. Let's see if that'll help out now. So it should be good. We shouldn't have any issues. I closed out of props, all that good stuff. So we should be fine. All right. All right, so I know most of you guys are probably thinking, all right, well, we just dropped into sell side. What's next? I don't know. I have to see. Do they want to run it back up to buy side? That's possible because now they dropped it down. Anyone that was long, right, has now been stopped out. And anybody that wanted to be short on the breakout, they're now short. So now it's more likely to take it higher and rip their face off. But I wouldn't go long on anything here yet. The easy run was just to that 72 liquidity pool. That's the easy trade of the day so far. Man, we've got all kinds of things going on here today. I got a grasshopper jumping around my office here. Let's see if I can get this guy out. Oh, man. Just flew away, so I'll have to take care of him later. So let's go up higher time frame. Talk about some things here. exceedingly difficult market condition on the higher time frame, and you can really see it on the S&P. Look at this daily chart here. So when you say, what do you mean it's a scalper's market? It's not easy to see what the higher time frame is doing. There's just not a lot of visibility. This is what I mean here. So if you look at this daily chart here, where's the obvious liquidity is reaching for? Where's the obvious market structure, institutional order flow? It's non-existent. So that qualifies this as a scalper's market, meaning exactly what we did today. Frame the obvious liquidity, wait for it to run there, done, move to the sidelines, because it's not likely to do a whole lot in a range like this until we leave it. So this is why the hourly chart, right? So now when you look at the hourly chart, now it'll make sense, right? From this week, we've opened here. Right, so this was the weekly open here. Let's make that orange here. So this is the weekly open. Look how many times we've referred to the new week opening gap throughout the week. Once, twice, 3 times, and now we're likely about to drop into it here a 4th time. When the market continuously refers to the new week opening gap, that is indicating to you that the market is in a weekly consolidation profile, because the weekly chart isn't leaving that opening price. So because it's not leaving the opening price, it's more likely to do what? Consolidate and refer to the new week opening gap for the entire week. So now this new week opening gap is our draw on liquidity lower for S&P. This is how you use new week opening gap. And you see how I was referring to it throughout the week? That's the surest sign you're in a consolidation week. Now we'll drop down to our 1-minute chart. So below the liquidity at the 72s, how far can we go? This new week opening gap here. So this is what a scalper's market looks like. Take it level by level, get what you're looking for, and then see if it gives you continuation to what you for what you want to see. So we'll go to NASDAQ. Yeah, so I think everything's good on the connection side now, or at least should be on my end now that I got the VPN fixed. All right, so we're looking for the NWOG. NWOG is the 960 level. I still got about 6 points away from it here. And then for NASDAQ, I'm sure you guys are wondering what's the new week opening gap for NASDAQ. That would be the 156s. 156s. So now still has about 60 points down into the 156s. But it is bearish at the moment. Broke down, breakaway gaps, leaving all these gaps open. We traded higher. We hit this up close candle. We failed to get above it. So that's indicating it's weak. Same thing here with the E-mini S&P. So it looks like the new week opening gap here is the next draw. Yeah, and then through that we have 53s. So note these levels here. So if we accelerate at like the 60s, the high of the new week opening gap, and then the 53s here would be the next level I would look for. Reason being, show you guys on regular trading hours here. Look at all these equal lows here. So just like the equal lows to the 72s, how like we proved that was a magnet on price, and it's almost like the S&P's listening to us, right? Same, so you got the same deal here. Look at this. So look at all these relative equal lows here at the 53s inside of the new week opening gap here. So several things converging here. So we're about to close the gap here. So that would be the settlement price here. So first level to concern ourselves with before we even get to new week opening gap is the settlement pricing. Now what I want to see it do is flush through that settlement price aggressively and be in a hurry to get down into new week opening gap. So these are like little scalps that you could just take all day long, right? Like from this run here to that liquidity pool, you can drop down to a 15-second chart, carve it up. Same thing here, from this run here just to that settlement price or down to the new week opening gap high. You could drop that into a 5-second or a 15-second and scalp that right there. That's stuff I can just do all day long. That eventually you can do once you have the skill set to read what's the next draw, where's it going, why is it going to go there, and then you submit to that idea. So what I want to see is, do we accelerate through that settlement price? So we close the opening range gap. Now I'm interested to see, do we accelerate down through that, get to new week opening gap high, and potentially reprice down into this liquidity here. All these relative equal lows here, I favor this as a draw. I think they're going to be in a hurry to take it down in there. So NASDAQ's melting. NASDAQ is reaching for the one. Yeah, I already gave you that price, right? I already told you guys. Yeah, I did, right? Yeah, you guys know the new week opening gap. Yeah, 153s. So your draw for NASDAQ is 153s. we'll just stay with S&P. It's the same thing. So the things I'm teaching you guys in the S&P, they apply to NASDAQ as well. So we'll just stay on the ES. So now what I would want to see this candle do here would be smash down through that settlement price and then be in a hurry to get into that new week opening gap high. Does definitely something with the VPN. Yeah, bro. Yeah, it is. It is for sure. And there's a lot of shit to that VPN, man. I was looking at there's split tunneling where you can like, make the VPN do. Yeah, it's interesting. Yeah, we'll just talk about it more after the stream, bro. See what we got to do here to get this sorted out. Jonathan, grasshoppers, LOL. Yeah, yeah, a lot of grasshoppers here in Panama. All right, so we're retracing here off that settlement here. So I'm watching this gap here. I want to see how we use this fair value gap here. That's what we're watching. So this isn't me telling you guys to go short. This is just watching this gap here. Islam, is it because we had a large range AM session yesterday? So already trading to the high of the gap like that, that's not something I want to see. Right. So if I'm bearish, I'd want to see it like leave some of it open if it's going to get down to the new week opening gap. So I have to put the new week opening gap price run on the back burner for now. Because trading to the high of the gap is not something I like to see. We'll see if the bodies stay in it, but as of right now, just that run to the settlement was enough. Closing in the opening range gap here. I thought it was reasonable if they're going to keep selling it off. It'd be reasonable to give new week opening gap high as well as the lows here, but we'll see what they want to give here. Is it because we had a large AM session yesterday? It's mainly because that daily chart, Islam. We did have a large range AM yesterday, right? So that can definitely be a factor for the morning being more of a high resistance liquidity run, but it really isn't. It wasn't too big of a range yesterday. So it more so has to do with the fact that the daily chart is in that compressed range, because what you guys need to understand is those higher time frames are paramount. If the weekly and the daily chart isn't moving, what you guys all need to get through your head is that the lower time frames are going to reflect that higher time frame price delivery, right? Because price is fractal. So the lower time frames are doing the same thing the higher time frames doing. If the daily chart is consolidated, but Dylan, we're scalpers, we trade 1 minute charts. Yes, but these 1 minute charts are framed through high probability using the higher time frame, right? Okay, what's the hourly draw liquidity, right? What's the 15-minute draw? And for those time frames to be moving, the daily chart also has to be moving. You see what I'm saying? So if the weekly isn't clearly running expansion directional, then it's going to make it much, much more difficult to ascertain the information as to where these lower time frames are likely to go. So easy trading is when daily, hourly, weekly, it's all obvious, it's moving, it's obvious market structure, it's easy as shit, right? That is super easy trading. When you don't have that, then you have to scalp and go into your lower time frames and just look for surgical price runs. Run to liquidity, run to the settlement price, maybe new week opening gap, get in, get paid, move to the sidelines, take it easy. So it's really understanding the different market profiles and how to manage your expectations within the profiles that the market's giving. Very, very important to understand that, because the market will shift into easy and more difficult conditions, right? And understanding what presents more difficult conditions is a very important skill set to have. So as of right now, it looks like institutional order flow is bearish here. I told you guys, watching the bodies. Want to see how we close. It's wicking outside the gap here. We'll change that color here. So it did wick outside the gap, but what I was watching specifically is the bodies here. You see the bodies stopping. That's good. I like that. So now it looks like the low here, the new week opening gap high, is back in play, and then the sell side here. So let's say I was scalping that. What would I do with that information? Well, I would drop down to my lower time frame here. I will see, could it give me 5 handles into the new week opening gap high? It does. So I would look at this 15-second gap here, see if this would lend a short into that into that new week opening gap high. There's three fair value gaps. Which would I use as the first pres? Are you talking about for NASDAQ or the S&P? I'm sure you're asking about NASDAQ. I'm like the demographic I think is like 80%, 90% NASDAQ. Only like a few guys trade S&P. Only a few of those in my group also trade S&P. I would use the 944 candle. If I was short or looking for anything for a run down into here, I would not want to see this high taken out, right? It should stay heavy from here if it's going to sell off. I'm not touching anything though. I'm not trading it. Just want to see if they can get that run down to end log here. Yeah, so the first presented gap would be 944 candle. And reason being, this is a little small baby gap here. I'm not worried about that one. This one's nice. This one's a little bit bigger. It shifts market structure, but this one's just a lot bigger of a displacement, right? You can just see this one here really stands out. So out of 1, 2, 3 candles, 944 would be the first presented gap in my analysis. All right, so we're back into this fair value gap here. We're hitting the low of it. Like I said, if it's going to drop, it needs to stay below this high. It needs to do so fast. Those are things that whenever I'm trading, I want to see specific signatures. I want to see specific things confirm what I'm looking for so that I can have the probability so far in my favor that I'm in a low resistance liquidity run. SLM 944, first presented, yeah, for sure. That's what I would use. Mustafa, so what do you think about today's draw on liquidity? So what do you think about today? What's your draw on liquidity? I'm sharing my draw on liquidity. New week opening gap. We're looking for N log, and then through N log, we're looking for sell side. Look at this. Fair value gap, bodies, turn, retraces, bodies, respect it, sell off. The astute price action student will see that we talked about this fair value gap here, so it's taking price lower than the new week opening gap, and talking about how the market, we don't want to see it get above this high here. So what does that sound like? A possible entry, right? And I say possible entry because you should be over leveraging your funded account on this. If you don't know what the fuck you're doing, you should not be over leveraging on what it is I'm giving you. Because even if you do make some money, you're going to be scared shitless, you're going to build bad habits, and it's not going to take you where you want to get to. So be mindful of that. I'm not trying to spoon feed you guys signals. I want to teach you guys how to fish. So we talked about if I was entering here, how would I scalp this run? So we'll go back into what we just talked about here. So I would short this 15-second gap here, right? Stop would be at the high. So I'd have like I'd have a 5-handle stop on it. So stop would be here. And then there would be my 7 handles into the new week opening gap high. So this scalp here, I took myself because I wanted to get paid on my prop accounts. This scalp here, I gave you guys real time. Fair value gap, right down the new week opening gap high. So those are little grocery getter trades that are happening day after day, or really shit, hour after hour after hour. Easy price action. So breaking down here, we have this 15-second gap. We're trading up into it. I don't want to see us just wilt lower from here. If we're going to get down into this sell side here from the previous day's PM session, then I just want to see it aggressively smash through new week opening gap high. But new week opening gap high is all you need to get paid, right? This right here replaces the day job. So Mustafa, does that answer your question about the draw on liquidity? Hopefully it does. The draw on liquidity is a constantly evolving thing, right? Because especially on these lower time frames, it's a lot of new information that you're receiving. So I'm looking at this 1-minute gap here. Would like to see us repel price lower and give me sell stops there. Jonathan Grasshoppers. Yeah, it's always something exciting going on. Andre, I like the scalping setup. Quick question. When you say find all those setups, is it safe to pull the trigger outside session times, Asia, London, New York? Yeah, absolutely. Absolutely. Um, what you see me doing here isn't just limited to the New York, like a random turning point there. New week opening gap high, right? Super random. Very nice. I'm not saying that's going to be the low of the day, but just got to admire the nice turning points, nice little algorithmic delivery. Yeah, back to your question. Can you trade outside New York? Absolutely. Absolutely. You have to know what you're doing. And I'm not saying that like, knock against you that you don't know what you're doing, but just in general. Well, I mean, you got to know what you're doing at any time you're trading, but especially the other times of the day. You can do the same things you see me doing here in the New York session. You can do it in the Asian session, London, in the pre-market, which is 7 to 9. And then obviously you see we can do it at 9:30, right? And this is just kind of one setup for life here, right? 9:30 open. What liquidity do they run to first? They run buy stops first. And then it breaks down. So big mystery where they're going to take it next, right? The opposing liquidity. So it's really easy for me to see setups like that. So this is really the one setup for life framework, right? 9:30 manipulation, and then the true run happens after they put retail in long here. Or if they're short, retail short, they stop them out here as well. And then there's kind of the one setup for life. So these same principles of the market giving a manipulation and then repricing to opposing liquidity, those principles are happening at all times of the day, right? So it's happening in the Asian open at 7 o'clock, London, and it's even happening within macro windows all throughout the day. So now if that hopefully kind of gives you an idea as to the amount and the plethora of opportunity and setups there are once you have the skill, right? Very big, important caveat there. Once you have the skill, because if you just try to go in and trade every macro or every hour or even every opening range, and you don't understand what you're doing, it will absolutely not give you the result that you want. So can you go into all those sessions? Absolutely. But you do have to know what you're doing. You have to have a trading plan. You have to know what you're trying to make, what you're trying to risk, how many trades you're going to take. Like all those things have to be defined. And then once you have that, you have a model. Shit, absolutely. You can carve out income anytime you want, as often as you want. Yeah, I know what you're asking. That's yeah, as it relates to the high resistance we were getting at the beginning. Yeah, so the markets transition, right? They transition from high to low resistance. And then I'm underneath the 1 minute chart, getting the insights that it's giving me, indicating whether it's in a high or low resistance liquidity, right? So this would probably be it for my morning, guys. Looking at this run here, we got the run to the new week opening gap. We talked about how in consolidation weeks, right, the market will continuously refer to that new week opening gap. Looking back on the week itself, we can see, look at how often the market is using new week opening gap since the open. Obviously, it uses it in the Asia session, which, since you're asking about Asia, this is my Asia model, just drawing into the gap that it creates, super easy. But then you can see throughout the week, referring to it here on Tuesday, again on Wednesday, and then what do you know, here again on Thursday. So whenever you have the market continuously referring to that new week opening gap, that's indicating it's a consolidation. Now, consolidation does not mean impossible, but it does mean you have to know what the fuck you're doing. So with that being said, guys, I think that's going to round out my session here. I'm going to go ahead and get these IT issues here sorted out. If you look at the Dow, man, pull up the Dow here. Dylan, why don't you like to trade the Dow? Dow sucks. This market is trash. Compare that to something like NASDAQ, right? That's something beautiful like NASDAQ or even ES, right? Not the cleanest day, but when you know what you're doing, you can still sort it out here. So you can see we bounced off the new week opening gap below. They decided that they didn't want the sell stops here that are inside the new week opening gap. They decided they didn't want that yet, which is fine. They can take that later, or they don't have to take it at all, right? They can just pull it back into the range. But I'm content with what we got here. We saw the run to the lows here, and then we talked about the run to new week opening gap. Told you guys if I was going to trade that run, how I would go down into a 15-second chart, how we didn't want to see it trade above that high. Why? Because this high here has an imbalance. You never want to see highs with a fair value gap taken out. It makes it a key high in your analysis. So that's why when it's retracing here, if I was short, I wouldn't be panicking thinking, oh my God, they're going to stop me. I'm thinking, okay, it's going to retrace into this imbalance here, right? But then it needs to give me immediate feedback, and then it does. Will lower into the new week opening gap high. Andre, thanks. Pleasure, sir. All right, guys. Hey, I'm going to go ahead and get going. Hope someone wasn't insightful. We will see what we're doing tomorrow. I'll have to let you guys know. Maybe I'll just take it easy tomorrow. We'll see. But if I do anything, I'll let you guys know in the Discord. And with that being said, guys, any questions from me here before we get going? It's still 10:15, so I got a few more minutes. Any questions from you guys? Anything that was particularly interesting? How'd you guys do today? Or just any comments on what we talked about? Pretty straightforward read. Excellent. All right, guys. With that being said, I will see you guys on the next one. Take care. Stay safe. And we will be back to business for sure on Sunday. Bye, everybody. Yeah. See you guys tomorrow. Pleasure, brother.